Hello. We are getting together for another trading stand-up with Prof of Wall Street. We have an amazing guest, Professor Fredrik from Ivey Business School. Used to be basically down the hall from me at Ivey. He's still there, holding down the fort, doing amazing work. And you might recognize Murali and Cam with us as always. And today's topic is a hot, sexy one. Maybe not in the general sense, but in the business sense, the stock sense, the world sense of AI. And we're wondering, as actual practitioners and users of AI who are actually utilizing it for real use cases and researching it. Fredrik just had a paper come out. We want to have just an open chat about the hype versus the reality and some of the big like identifiable screw ups that are already happening in AI relative to what's happening in the market. And so it's sort of a free form about our personal experiences with AI so far and how do you handle these wacky stock prices and valuations that seem to make no sense, and all the interesting kind of shell games that we see behind the scenes in terms of money being moved around. So with no further ado, we're going to just jump in and tackle this idea of AI hype versus reality. I was curious, Fredrik, do you want to talk about your article that you just published? It sounded super interesting. And
Oh,
could you kind of recap like what it is, how it relates to this topic?
sure. And thanks for having me, first of all, and great to see you, even though we are only virtual this time. So it's just maybe I should preface it's not quite about the stock markets and the valuation of AI companies per se. The article I just had published in the MIT Sloan Management Review deals with these lawsuits in the antitrust and collusion space, where you're employing algorithmic pricing to set prices. And it mainly came about from in these US lawsuits. There was a software provider called RealPage, which has a software, a revenue management software that it sells to commercial rental property owners. And in order to facilitate to set prices for, I mean, these companies have, thousands of units, or maybe even in the tens of thousands of units. So you can't really just manually go and set prices on each apartment. So I mean, you have to automate it somehow. But then what this software did, which then led to that its collusion, was that obviously the software provider wants to sell to more than one rental company. So now it has lots of rental companies. And what they then did was, or allegedly did, quite been hashed out in detail in these lawsuits because they got settled, is that they centralized private information from these landlords, basically.
Ooh, wow.
And so once you coordinate
Oh,
on private
wow.
information and then you combine that with the public information of what are rents trading for, then obviously now you're getting into, and then you optimize on that, right? And then the second part of their software is that you'll optimize on the private information and coordinate the prices across these different markets. So there was a whole bunch of lawsuits going on, and these antitrust, again, in the Sherman Act. I mean, each state has basically their individual versions of the Sherman Act.
Hmm.
So that was what then the premise was, or what this article is about, but I just published it. Well, how can you avoid? Uh, so what the company man said, no, we're not colluding because there's no sort of overt open communication. Like the idea we have about pricing collusion is that these people are sitting in a back office smoking cigars and drinking scotch and divvying up the market and arranging, making private deals and so on. But now you don't need that. Now you have these algorithms running, and the question then is, can the algorithms on themselves collude and figure out what to do? And if they can, then what are sort of some of the mechanisms you can put in place to avoid that? And so that was what our piece is about, is highlighting that the Justice Department and the Federal Trade Commission have come on and now say, no, you just because you don't have an overt open communication or agreement, explicit agreement, you can have tacit collusion. So you can have per se collusion that comes automatically from these algorithms. And that was what we were highlighting, these law cases, and then highlighting what it is you can sort of do to prevent that. And primarily to avoid that is, of course, make sure that you don't share private information. You can't have this central depository and then, hey, this is how we're doing, how are you guys doing? Okay, let's figure out
Wow, that's
together what
wild.
the prices are. So, so
I'm just taking it in. I knew that article very superficially, but like the first time that collusion, I heard that term, I was like like undergrad econ major, and the example of collusion was like, airline execs at the golf course, hey,
yeah,
psst, psst, that was kind of their like collusion. And now fast forward, and today they don't even have to talk because your point of this paper is that the technology that gives access across different companies does the collusion for them. And so they're like, it's not us. They're colluding because the algorithm is saying, well, we could just move up everybody's prices and the whole market moves up. Is that really the
yeah.
the FTC case here that you're
That,
screwing the consumer?
That's right. And so what we were just highlighting is, I mean, there's a couple of different levels on how this collusion can take place. But one is if you're using a centralized platform, which took place in this specific instance with these landlords and this revenue management company called RealPage, is that if they are the central depository of private information and explicitly sharing it openly and then explicitly optimizing
Mm.
between all the players that are in there, and it seems pretty clear that that would be collusion, even if you haven't, as managers, gotten together as it. But then there's also now arguments saying, hey, well, even if we don't have that, even if we just let these algorithms run on themselves, they can figure out what is in the best interest for us individually, even if we're not using, a centralized depository of information. We could, if I'm just responding to your price and you're responding to my
Price
price, and
discrimination, Frederick? Like
sorry.
like micro level price discrimination? Like in the
Well,
econ
I
sense,
mean, I
not in
guess
the legal sense.
no, no, well, it could be in the first sense that you said, but I mean, on a micro level. But these algorithms, even if you just have sort of price response algorithms, so now there's argument that these machine learning techniques could be made are so sophisticated that they can figure out, well, if you just tell me maximize, my objective is just to maximize profit, and then I have another company, they have their own algorithm, they also maximize their profit, and then but these machine learning techniques are going to be able to somehow figure out, oh, we can have these super competitive prices. We can like escalate it up to this level rather than staying down at the competitor level. Now, those arguments haven't been, presented in a legal sense yet, but so that's more in the academic world where we're sort of proving that there's algorithmic pricing can be lead to collusion even if you are just based on private information on it. And me and my co-author, Chris Anderson, what we then show is okay, but you have to also be a little bit, it'll be hard to disentangle this aspect of a collusion because most pricing algorithms, if you're running a private pricing algorithm that's not taking into consideration, some sort of centralized repository of private information from the other competitors, most times you're not just doing a price a reaction. You're not just reacting to the competitors' prices. Most times you're actually taking into consideration your capacity or your inventory level, and you're trying to
Yeah.
max optimize with respect to what inventory am I carrying, and then okay, then what prices is out there in the market, and now I have to price. And so I think that's going to be the next step in all these legal cases is to show or to somehow establish how can you prove collusion if each company has their own pricing algorithm using only their private information and then the
Hmm.
public pricing optimization. Yeah, I'll be, I think it to be ex determined, to be seen. So,
Interesting. You're hitting like some of the main themes that have come up, in these conversations in general public about information security, leveraging other people's data
mhm.
to train the models. Those are kind of two big themes. The infosec, I don't know. I imagine Murali may have something to say about the infosec aspect of it, like training models on other people's data. That's central, and there's tons of lawsuits about breaching. Using other people's information to train your models. That's big. There's obviously the big Meta lawsuit and other related ones like that.
Mhm.
The question that I had is like, what's the next best alternative? Like, I think it's like the delta that AI is adding. And I think where this conversation sort of started is everyone's so excited about AI. And I know that I'm putting big quotes around that because AI is statistics, but like, what is the material difference or the kind of the pluses and minuses that AI is adding in this specific use case? I mean, we all kind of have our own specific use cases. We want to kind of talk about how it's adding or detracting simultaneously from our workflows as quants, software engineers, as managers, marketing people, whatever it is. So to me, it seems like it's both pluses and minuses, but it brings up these new issues that we've never had to deal with before as a society.
Mhm.
And so I'm curious about like the kind of the net, like the net gain. And we talk about creative destruction and how AI is the next, big creative destruction, but there's like type one and type two. There's a type that generates more growth, and there's a type that actually reduces the size of the economy because it makes so much irrelevant. I know these are like huge macro issues, but like
Mhm.
they relate to this specific topic. It relates to AI being hyped, overhyped, or appropriately hyped.
Mhm.
So I want to kind of dive into like these core generalizable issues. From, for example, information security. Uh, does it create versus destroy in terms of economic growth, and like the major risks that come out of it to help us understand like where things are going? Because I predict that something bad like this is going to happen. There's going to be some kind of pullback that kind of, the water goes down. You find, as tide goes down, you find out who's, not wearing any clothing. I think that's going to happen. So I love the use case. I was curious, Cam and Murali, can you maybe touch on some of those core themes that were brought up and what your opinion on it is on, directionality?
From information security side, there is the like you mentioned, there's probably going to be some sort of major event that is exposed because of AI. Like you're already seeing this in prompt engineering, right? Like, people are AI is everywhere, and people are taking advantage of the fact that it's being used for various tasks, and now you're starting to see people that, malicious actors take advantage of that through prompt engine. I think that's going to be the major vector I mean, it already is. It's already happening. People are leaking. I feel like this is going to just end up resulting in another major data leak, probably several of personal information, private information being leaked out to at a large scale through prompt engineering. I think that I mean, it goes both ways as well. A big part of security is staying on top of the most up-to-date um security practices. With AI doing a lot of that automation, that's going to become easier and cheaper to do. If you guys have heard that the Louvre basically was targeted. That was like a physical, they actually literally like broke into it, but then afterwards it was a postmortem on all the security loopholes, and they found like one of a lot of their security technology was like wildly out of date. They had terrible like Wi-Fi or passwords and stuff like that. AI has the ability to accelerate and move the needle forward for that type of institution incredibly fast. You don't need a giant security team. You could have a couple AI monitored by one or two, and suddenly the bar of security is going to be a lot higher because of AI agents. So in that way, it's kind of interesting that you're going to get generally, I feel like the bar is going to get higher in terms of security accessibility, but you're going to see on the other end novel opportunities for attack. So, but like you said, almost like it's just such a wild west. Things are moving so incredibly quickly that it's difficult. It's so hard right now for engineers specifically to keep up with usage and what's happening, and models are coming out lightning fast. Some are really good at this. Using it is really challenging it. So, like I said, I think my take is that there's probably going to be a major a private data leak, and that two, there's just going to be a lot of you're not going to I feel like you're not going to see these really lagging security holes. Like, that was kind of the thing, is that there's a lot of people who just had, their windows and doors wide open. Now I think you're going to be able to take advantage of AI and close a lot of places that used to feel unsafe are now actually going to probably take a big step up until they, um, hopefully they don't get caught with their pants down until then. But that's kind of my thinking here right now.
So much there, so much there. Uh, just an interest. I know Cam, there was a couple things that you were like mentioning earlier I thought were really interesting and relevant. I was curious if you wanted to jump in and kind of, you know, fold them into the conversation.
Yeah, I guess my thoughts are much more like high level on all this AI stuff. Like I know we've been going over like the specifics about like where it could go wrong, where it could get into trouble. Um, I'm what I've been seeing and what I've been feeling myself is just like a kind of a lack of um, like just like unsure how to navigate the entire market
Mm.
when, like the S&P is now dominated by like AI tech companies. It's really rising mostly off of just um, the performance of those. Like, it's almost hiding the underlying problems in the economy. I've seen graphs about like jobs being completely flat over the last couple of years with like profits still rising on the same trends, stuff like that. And it's like you see it and like everyone's calling it like a bubble. And it's just like, how do you navigate that? I'm getting like, constant feelings that I need to sell things to make sure that I like dodge like a crash. But, people always tell you don't do that. So, yeah, just like it's a very difficult thing to quantify when you have like a company like Nvidia, where I think I just looked and they're still expected to grow their revenue by about 40% in the next year. And they're just by far the biggest company, like worth like $5 trillion. It's like, how big can it get? And like, where does this money eventually come from? Is
Mm.
like where I'm at in this like situation. But yeah, it's like a constant feelings of like I should do something. Like, should I sell something? Should I buy something else? Um, and like, yeah, that's kind of where I'm at. And it's interesting because the market just fell like a bunch the last 2 days.
Mm.
But the last few days before that, it was just flying. And it was making me every day think like, should I be doing something? But
Well,
yeah.
I guess if I just jump in here, I wasn't quite sure where you're going, Amos, with your original question and then where we're at now, but I just were to comment a bit on Cam's there on the analogy or on the AI bubbleness and all that. And you guys are so young looking, so I don't know if you remember the dot-com era or if you even lived through the dot-com era, but I did. And there are some similarities. There's a couple of similarities between that era and now, but then there's one striking difference which loops back to the financial sector and the investment, which I'll get to. So the two similarities that's going on right now with the AI bubble and the dot-com bubble is that everything is AI, right? So every company, no matter what you do, if you're a dog walking guy, you're AI. Oh, I take care of the walk dogs with using AI, blah blah blah. If you're a medical company, you're AI. If you're a mining company, so AI is everywhere. That was the same thing back then during the dot com. Everything had to be dot com this, regardless what your business is. Like and that's really funny in terms of just how language changes and how we think about things. Like if you don't have AI in your title or in your name, you're like, I mean, why listen to you, and so on. So that's one thing, just on the language. Then the second part is, as Cam was mentioning, this unbelievable just funneling of money into all these things. And I mean, these numbers have just completely lost their meaning. It does, like, you have like no reference to it. Oh, Nvidia invested $200 billion in a data center here. Oh, Amazon invested $20 billion in, oh, this person got bought out for 100 billion. I mean, the numbers are just like, who cares? Like, it's just completely out of, I mean, the arms race in like who can spend the most is crazy. And that was the exact same thing back then. And I mean, there's, you know, lots of funny stories from the dot-com era on like how many companies just poured tons of money into all these dot-com and it just like sort of evaporated and for no avail. And I think one of my favorite one is the one, these three Swedish people that started wanted to be an online clothing company called Boo.com, BOO.com. And at that time, this was a lot of money. I know nobody's going to react now, but they managed to get $110 million investment from, I don't know, whatever it was, the Gucci family, the Armani family, whatever it was, all these fancy families. And of course, just blew it in 9 months. And these days, yeah, of course, $110 million won't last you a day, of course. But anyway, and we see the same thing now. So that investment, the big difference that why it's not what I would call it's not quite an AI bubble yet. And this is kind of interesting to see how it's going to play out going forward is during the dot-com era, I mean, the race to have an IPO among startups was so quick. And everybody just wanted an IPO, and right. And so you start a company, you have nothing, you just got PowerPoint presentations, you have no product, no nothing, you just have a promise of here's my dot-com business, and you raise a bunch of money, and the race is just to have a dot-com, and of course, sorry, to have an IPO, and then that crashes. And we haven't seen that yet. There's tons of these underlying startup companies in the sort of the ecosystem of AI. I mean, and also in the real ecosystem of AI. So if you go up to, Waterloo and Toronto, or even here in London, Ontario, and certainly Silicon Valley, all these startup companies that are trying to leverage AI to do something. And so there are startups for sure, but we haven't seen quite yet this whole just, proliferation of all these IPOs coming out of them. And I was just talking to a financial person in the investment industry, and he said, and his take was, we might not see it. That what we might see now is instead that they won't, the path is not to IPO. The path is just to private equity or private loans. And so that you'll have these big banks just providing private equity or private loans to these and buy them up. And then I was saying, so how do you, what's the exit strategy from most people then? Like the exit strategy says you're just going to keep passing this on, right? So here you have a startup. Oh, we just got valued at $1 billion by Goldman Sachs. And then Goldman Sachs passes it on to, I don't know, whatever, Morgan Stanley for $2 billion. And Morgan Stanley, passes it on. And again, these will eventually be, it won't be, Goldman Sachs and Morgan Stanley, and those companies will be sort of lesser known companies, and including, and that's what we see now, Nvidia passing on to Amazon buying it to Microsoft passing on to Facebook or Meta, and so on. And I think that's kind of interesting what's going on right now in terms of, is it an AI bubble, or what's the similarities between this AI bubble, if it is, and the dot-com era, and we'll see how this plays out. So just some comments on Cam's point there. So.
Thank you for that historical reference, Fredrik. I think we're not that far apart in age. So, I was in high school. So I graduated high school in 98 for reference. So I don't know where that puts us. But I remember that, like, the dot-com, exactly as you said, everybody has it. But then I remember around 2001, I was like undergrad, and there's a Wall Street Journal article, and I remember the illustration of them clipping the dot-com off the name.
Oh, okay. Yeah.
So there was like this distancing from what was going on, and it was such a beautiful way to just show someone clipping. This wasn't the company, but Fidelity.com or whatever. Obviously, Fidelity is still very tech, but they're clipping off the .coms to distance. And I think that in addition to what you said, there's also going to be, so there'll be consolidation, and there's going to be like some big retraction, and just whoever survives. I mean, everyone's trying to get a piece of it. Like you said, the IPO part is really important, that you're not seeing it, but there's a lot of M&A in the space. So, we're in the fintech space. We see companies just getting massive amounts. So I don't want to name the specific company. Big company in Toronto just got $750 million, and they're making a ton of acquisitions. So we're seeing a lot of that M&A in the space to kind of gobble up these companies. Whether or not they're successful at gobbling them up and integrating them, that's another question. I mean, that's maybe a Cam or Murali question about how well tech can be acquired and implemented and leveraged to make a company better off. And it kind of gets back to the beginning of this conversation. Well, here's a tool that was being sold to these property managers, and that's kind of, to me, it seems like a big oopsie of like a thing that wasn't on the top of my mind. So Fredrik, I'm so glad you wrote that article. You did the back-breaking research to like research it and uncover something huge. I was thinking like consumer level, like I'll talk about my experience with a very well-known tool that's used for software development. I've been using it lately, and it goes so quickly. So I want to do some basic like quant work on it. And the analogy that I had in mind for this tool was, it's like you have a contractor and you're like, I'm thinking of building a house. You want to build, and he's like cracked out. Oh, you want to build a house? How many stories? 3 stories, 10 stories. Okay, let me build one for you. And then you don't like it, I'll tear it down. It's like this like methamphetamine version of a helper. And I've found that just like trying to contain this helper, it's made the work twice as long, because I could just write it in R or Python or Stata, and I could have just done it by now, but it like pulls me so far off track. So maybe I just don't know how to use it, but it feels like a cracked out assistant that's actually hard to wrangle. So I don't know, Murali's nodding. I don't know, Cam, if you're nodding on this, but I'm like, finding it's like, and it's making me sort of learning on the margin, but it's like, dude, let me just write the code and get some middle space versus you running off like, like you're doing lines of cocaine before you help me out. So I've never done any of these things, so I actually don't know what it's like, but I'm finding it in a way on average almost counterproductive because I could do the code and I could do it another way. So that's a micro case of that. I think there are people who are better at using it than I am, but I'm finding really mixed results. In some ways, that's really cool. In other ways, I'm not so sure. In terms of the big screw up, I don't know what it's going to be. I mean, Fredrik, I love your use case. I think it's a big warning shot in a way that I don't think anybody's thinking about. I think people are probably thinking about what, Murali talked about, information breaches. They're talking about other things. I'm thinking about really horrible things like a nuclear plant meltdown. I mean, the Louvre example is also wonderful. Like, and there's that big gap. And I think, Cam, your point about this, like, I don't really know what's going on, is shared by a lot of people. So I think the confluence of these sort of, oh crap, this happened, and this is sort of like this chinks in the armor of this idea that will cause people to feel just like you expressed, Cam, uncomfortable, pulling back, selling. And I don't know who's going to catch that, if that's going to be a dip buy or a falling knife, because the valuations are so high and there's so much uncertainty about the tech. So from an individual investor perspective, we could drill down into that, but I think there's a lot of interesting counterexamples of how it's not going to live up to the hype, AGI, blah 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 blah. I'm curious what you guys think, kind of in closing. Do you have a prediction in the next, say, 12 months versus, say, 5 years about how people will feel and adopt it to the level of Fredrik, even the dog walker using it? Like, do you get a sense we'll go back to, let's say, 2023? Or, what do you think it's going to look like, in 2030 relative to today? Is it going to be backwards, forwards, the middle ground? I'm just curious about your predictions, and we should probably wrap up.
Okay. Yeah. Shoot. That's a lot of pressure for
I know,
a
I know,
1 minute
I know.
soundbite. What's my prediction? Yeah, honestly, I don't think we're anywhere near a peak of AI bubbleness, that's for sure. I don't think even we've seen I mean, we're basically just in the starting phases of it. And exactly how this evolves yeah, it'll just be super fascinating. What should I call it? Litmus test, or my signal is I visit San Francisco quite often, like at least once a year. And the signal I always get is what's the buzzword on all the billboards.
Mm.
And so just visit San Francisco and see, as AI or Gen AI gets taken out, and so for a while it was LLM was there. And then so whatever, just pick up on the latest one. So see on all the billboards and say, okay, now we will then see it's like what's trending now, what's coming next. Yeah, and in terms of valuation and investment, it is crazy. Where's all this wealth coming from, and what kind of fundamentals is, like, all these companies, the big ones, Nvidia and Meta and Microsoft and Oracle, what kind of fundamentals are they working off in trying to get the ROI back on all these billions and billions and billions of dollars? That's yeah. I don't even know if they have any fundamentals, or if they're just like, hey, who cares? Let the party continue. So
I don't know. I can't imagine that they have fundamentals under pushing. I think it's just, executives doing their best to keep up. That's pretty rampant in Silicon Valley. Um, I just, yeah, like the ROI on this, the amount that they're pouring in, it's just like it can't possibly get an
no,
ROI
yeah,
on this.
yeah,
So I don't know, maybe just they're just doubling down. I don't know if there's going to be it feels like there's going to be some sort of watershed moment, but if you were to compare this with the dot-com, I don't think they're like, again, I was around, was not paying attention, but like there wasn't a certain company that just imploded and then everyone was like pumping the brakes on dot-com. I imagine, I don't know, the kind of when I think, I'm like, there might be a bit of a watershed moment of something happening. So, I don't know, an Amazon or someone taking some massive revenue,
yeah.
and then that's just like, uh-oh, one of
Well,
the big guys pulled out and
yeah. Uh, so sorry, Amos, if we're going continuing here, but
go ahead.
I'll just comment one more thing on that. So again, in the realm of trading and investing and so on, I mean, I did this exercise once just to see, because one of the things everybody's afraid of is, oh, did I buy on the peak? Am I buying this stock on the peak? Now, so first of all, if you're going to buy a stock on the peak, or you're going to buy a stock, of course, you want to try and avoid the peak. But what's supposed if you didn't? So I did this exercise for, I think, a couple of companies like Ford and Microsoft and whatever. And I did, how long does it take to recover if you buy the stock at the peak, like until it's actually past that peak again? And for most times, it is actually quite quick. It's less than a year, and I'm just hand waving here. But if you did buy Microsoft at the peak of the dot-com era, I think that one then took on the order of 10 years to get back, right? So there is that sort of what I would warn or whatever learning lesson to be is like, yes, if there's going to be a peak now and you buy at that peak, you might be in for a long term. And I know another friend of mine, he bought one of the bank stocks at the peak during the subprime mortgage, before the subprime mortgage crisis. And again, I think even 10 years after it was still in the red, it was still under, right? So, and I don't know what, anyway, just a comment to throw out there. So.
Yeah, I guess my prediction, I think the companies that are gonna be found like to have no real weight are the ones that seem to be almost like derivative companies in AI. So I think I have a bit of context for this, having like seen like having seen how this might work like from the back end. But some companies are basically just taking open source models, doing a bit of prompt engineering, like giving a bit of context to the model, maybe giving it some documents to read, giving it a bunch of like system kind of instructions on how to act, and then kind of just putting a tag on it and then selling it. So those kind of companies I feel like will just dry up, especially when AI just improves and can do those things on its own. You don't need a specialized company to do that. So I'm thinking like companies that maybe just take AI and like it's like a running coach, like an AI running coach. Those things I could imagine. I could imagine being able to make that myself just as a solo project. So I can only imagine like a huge company that's selling that, like how little it actually took to do that. Um, so I think, yeah, any company that's like fundamentally like gaining from AI, from like using it. So maybe like medicine, like in like drug discovery, if they're using AI to do that, I think that's where there might be value. But I think like just tagging on things and creating like an AI agent you can use and just like the next best AI agent, I think that's kind of just like those companies are mostly going to dry up in the future. I don't think any of those are really going to like last all that long. So that's my prediction. But I have no idea about how the stock market's going to react. I feel like it could go either way. It's kind of just sentiment based. I feel like, yeah, if like a big moment happens that changes everyone's mind, then it could really drop. I think we even saw like people thought the bubble had burst before when like the DeepSeek thing came out. And I remember like diving really deep into that and realizing this is like almost like a positive thing for AI. Like I don't know what everyone's so worried about for that. But you saw like Wall Street in general just like pull back heavily on like Nvidia and some of these other companies. And just looking at that compared to how it is now, like it's gone up over 100% just from that pullback. So I think like the market's ready to pull back if it gets bad news. But sometimes it's is a little trigger happy with that from what I've seen. So that wasn't a very clear prediction, but
I think
those
the
are my
granularity
thoughts.
is really interesting, Cam. No, that granularity is important. Like this idea of being moatless, and like we all know someone on the team who had a company that, just like you said, Cam, they have no moat, and then the new model made them irrelevant. And I think that vulnerability, I think everybody's worried about that. I think just to sort of cap it off, is I think there's not a single person in any profession who does not feel vulnerable. I mean, Fredrik, you're a tenured professor, at a business school. I'm curious, what are people thinking about education? What are they thinking about the hybridization of, human plus machine? You know, I I think if you're a software developer, if you're a quant, if you're an entrepreneur, if you're a doctor, I think there's nobody who feels completely unthreatened by the emergence of it. And the line that you hear over and over and over is you're not going to get displaced by AI. You're getting displaced by someone who's using AI. Like you hear that over and over. And like, you see the mass firings at these tech companies and you see the hirings of prompt engineers and like all this other stuff. And so I think it's like sort of a TBD. Like people get so excited about efficiency and productivity and all of that. But I think what it's doing is exposing some of the cultural issues that companies have about commitment and working hard. And it taps into so many of these bigger issues that go way beyond this conversation about productivity, international competition, what's happening, in China versus the US, the impact on worker commitment and transitivity and all these other things that are kind of might seem tangential to the conversation. But I think the AI part makes people feel even more scared, even more vulnerable, and exacerbates these sort of conditions that we're seeing in society that are like way beyond the conversation. So I think, in summary, whatever we're doing, I think my approach is as follows. I think, what am I trying to accomplish that is what I'm trying to deliver to the world right now? And I try to select the tools that allow me to do that as best as I can, with minimizing, the security risks that, Murali had talked about, with trying to not get over my skis with tools that are going to be irrelevant. Like Cam, the point you made about, well, if I use this tool and it's really just using some other, ChatGPT or Claude or you name it, and then that tool's going to disappear, then I don't want dependency on that tool. And I love your use case, Fredrik, of this aggregation of information and the vulnerability that you as a company are using this external third party that makes you now vulnerable and you can get in trouble for it. And I think Murali taught that to me a while back, that it's usually the third party vulnerability that hurts the most the companies. So I just think this is so complicated because it brings up all of the issues versus what is this AI thing. So I'm just trying to stay glued to it and make sense of it as I go along and adopt tools that do materially make a difference, versus hype, and not sort of sell out my thinking. And I think that's the part for me personally. I'm sure as a professor, Fredrik, how do you remain in control of your thought process? How do you stay grounded in the truth? And I think of academic research as kind of the closest thing to truth. That's my bias. I imagine you might feel that way, versus hype and all this nonsense you see out in the world, like people that spend their lives focusing on a single problem, and you read their work, it's like, it's so nourishing and it's so deep. And I find that to be, to me, very grounding versus the stuff kind of reading the general public. So those are my thoughts kind of wrapping up. I know this is a trading stand-up, and the thought is, what do we do with our money? How do we handle this situation? How do we handle the market? And I feel like we opened up more questions than answers, which is okay, which we're happy to tackle. Any questions, one-on-one or continue the conversation. So that's it for me. If there's anything else you guys want to say to close, I think that'd be a good way to wrap up.
Well, to be concluded, or
Yeah.
to be continued, as the Back to the Future movies always kept saying, to be continued.
Right. Cool. Okay. Well, thank you much. Thank you a great deal. And I look forward to our next chat, and have a good weekend.
Cheers, guys. Have a good one.
Yeah.
Take care.